is my next little thing that has to be up. And I actually do need to get this off of here and get it put up somewhere. Okay. If I put this here, can you guys see it? Is that okay? All right. Not the greatest room for this, but okay. All right. So internal controls are your bedrock, okay? Without them, you're probably going to get nowhere fast. They underlie all of your business operations systems, procedures, policies, your fund development, and that, as we've already established, underlies your ability to deliver on program. You have program delivery, transactions recorded, services rendered. We end up with operational reports. We start summarizing, and at some point we end up with financial reports. We've got all this data flowing up to finally something that's on a piece of paper, you know, a whole bunch of information that's on one piece of paper, right? This is summarization. But internal controls are the starting point, and without them, you're not going to be around for very long. Whoop! Sorry about that. Okay. So, you know, again, this is different. The level of sophistication of, you know, American Airlines and their internal control system is going to be real different from yours, right? But these are the basics, okay? Segregation of duties, management oversight and approval, and board oversight and approval. And I'm going to give you some examples, okay? When you get an outside audit, your auditors are required by auditing standards to issue a written report, which is available to the public, on your systems of internal control. And this goes to this SAS 112 checklist. And this is a friend of mine who has a practice in New York. This is actually in your resources toward the end. We're not going to have time to go through it in a lot of detail, but please read it. And you can also download it from her website. This speaks to all the things that you're going to be required to do. Now, what is this going to affect? Things like, does your accounting software format all your financial statements that are at the end of the year? You know, can you incorporate a cost allocation plan that is applied consistently throughout the year? These are all the things that the auditor is going to be looking at, and these are the things that you should be looking at from an oversight standpoint. Not everything is going to apply; depends on your organization. But the reality is that you know, if you have what's called material weaknesses in this, your government funding for sure will get pulled, okay, if you don't correct them. So it's important to just kind of get familiar with this, but it all goes back to that business operations system, okay? It all goes back to those system of internal controls and how you set up those business operations. Do you have the capacity to do all this? Okay, moving on. Here's an example, and then we're going to move past financial controls. This is a typical scenario. You're typically making the deposits, writing the checks, and keeping the books. You've got one person doing it, right, in a small organization. So how do we fix that? Because that is obviously, you know, just like an invitation, okay? If you get the wrong person in there, you know, I just really wouldn't want to know what would happen then. So the executive director needs to sign the checks, not the person who's actually doing the work. That's obvious and clear. But over a certain amount of money, let's say it's $1,000 or $2,000 or $5,000, depending on your organization, you also should have a board member sign those checks. Should be 2 signatures, okay? Your board treasurer should either reconcile the bank account themselves or carefully review the reconciliations. I know of an organization where the chairman of the board does the bank rec, okay? Because he wants to know that everything is fine, okay? Some organizations, and this is actually recommended best practice, have the bank statement sent to a board member's house, not to the organization, okay? Not because we don't trust people. It's so that we don't have to wonder if we trust people, okay? And then when somebody asks you about your system of internal control, you can say, it's very robust. Can I move on and come back to your... Okay, additional idea.
Idea for the second bullet point, which is what we do. We have a contract CPA that comes in. She opens the bank statement.
Yes.
She does the reconciliation. She actually then can also offer some kind of higher level accounting
Yes.
advice on an as-needed basis.
You're a lucky organization. You can bring in an outside CPA to do those kind of things for you. And it's very, very cost effective. And it is one of the solutions to a lot of these problems. Thank you for adding that to the conversation. I appreciate it. Okay. So now we're going to get to financial statements. And I know I have to move on, so we're going to really go quickly. So why are financial statements important? Who uses them? Obviously, management uses them. The board of directors is going to use them to oversee management, right? Your funders are going to use them to oversee what you're doing and to make funding decisions. Your donors want to know if you're using their donations well. The public at large can look at your financial statements anytime they want to. The IRS, the Franchise Tax Board, the Secretary of State, right? This is probably not a complete list, but it's close. Individual donors don't always look at your financials, but large donors certainly do. Okay. Studies have shown that more and more smaller donors are using GuideStar and Charity Navigator. Okay. They want some outside expert to tell them all about you. So you have a decision to make about what kind of story you want to tell. Okay. Should you put your financial statements on your website? Or should you rely just on the 990 that people can download? Should you put your 990 on your website? Okay. Lots of good questions, not always clear answers. I would say yes and yes, but that's just me. Should you publish an annual report? Lots of organizations do, some don't. Depends on what you're doing. Okay. Is there a difference between all of these things? Yes, there is. Here's an example. These services and people who just go online and download the 990 use the 990 to rank you and to analyze what you're doing. Okay? Your GAAP financial statements that people like me would prepare for you, or your CPA, or at your audit or anything like that, or your internal people if they're doing it right, are designed to, the accounting pronouncements are designed to come up with financial statements that supposedly reflect, as close as we can get, economic reality. Okay? Economic reality and the IRS are not the same thing necessarily. Okay? Why is that? Let's talk about it. Donated professional services. How many of you have donated professional services? Okay? All right. On your financial statements, your GAAP financial statements, generally accepted accounting principles, for those who maybe not are familiar with that term, you are required to value and report the value of donated professional services on those statements. That's a revenue, and then it's either a program expense or an admin expense, or if it's architectural service or you're building houses or something, maybe it's an asset, right? But you're required to keep track of that and to report that as part of what you're doing, because otherwise, somebody would have had to donate the money and you would have had to pay for it, right? So all we're doing is skipping that middle step, but it's still an in-kind contribution that should be recorded. You're not allowed to put it on the 990. You're specifically precluded from putting it on the 990. So the story that is economically really happening in your organization and the story that the world at large is seeing if they're looking at your 990 are going to be completely different. So we're going to touch on this later, but the first thing we're going to do is look at some GAAP financial statements, okay, so you can see what that looks like. You're going to have these in your package, and we're going to go through them quickly. This is the 5 basic statements that we deal with in nonprofits. Financial position, statement of activities, functional expenses, which is there's nothing like it in the for-profit world, cash flow, and budget versus actual. Okay, everybody see these every month or every quarter? Everybody's okay with this stuff, more or less? Okay. This is I'm getting my soapbox here. Okay. If these, move your board meeting if you have to, but have the previous month's financial statements in the board's hands when you meet. Okay? Don't meet on the 5th of the month. Okay? Because you're going to be looking at old data, and things are changing fast. So you want new information. Timely, and then, that old bugaboo, accurate. And that's harder sometimes said than done because it's time consuming, and we want to make sure